Welcome to another YouTube video of trade breakdown. This time is going to be USD CHEF that made 3% easily on the Tuesday. So let's get it. Now USD CHEF, we are currently on the 15-minute time frame, right? So the overall trend is bearish for the USD CHEF for a couple of days, couple of weeks at the moment. So in this video, I'm going to explain everything for you into the details. So make sure you take notes, make sure you pause videos and type in, because I'm going to give you a lot of information for you to help for your future trading. Now, so we're gonna start from the last day, previous day, which was on the Monday, which as you can see on the downside at the bottom. This is the session indicator. As you can see, this is the Monday situation and what happened. Now, so Monday, what happened is basically we had this order block being created in the London session. We had small liquidity, then we had break of structure with this impulse movement down that broke this structure, so this recent low, and as well this one. Now, what happened in the New York session was basically price flew to the upside, took out the liquidity, so the equals, reject the order block to the T, so this is now marked up, rejected, and then slowly pushing down and broke everything as you can see on the downside. Now this is the confirmation that we have break of structure, so meaning that we have this huge break of structure, which is also beautiful. Now what happened, this is the impulse from the Monday that created this break of structure to the downside. So usually you can say this is supply or demand zone. This is definitely supply, it's not demand, but you can say it like this. I'm using order blocks, which was the last up candle prior to sell down, as my confluence entry. Now let's go into the details where everything lies, which means liquidity, trend, order block, price number, like literally everything that you have to see before going into the trade. Now we have this order block that I'm going to mark them up. Currently we have the number, we have 0.9028. I'm gonna round this, so this 3 pipettes, I'm not using that, so I'm going to round this on a 28, which was basically the entry. Now in a sense of what happened, where it can be a possible target. Obviously, if you watch my previous videos, I always saying that I'm targeting 1 to 3 risk reward ratio because I found this consistently, and it's stress-free. 3% happens quickly in a session or few hours, and that's about it. And if you can do that consistently over a long period of the time, it adds up, right? So what happened? Let's see. We have Asian session. I'm going to apply the indicator. As you can see, we have Asian session. Asian session high was rated. Beautiful. We have imbalance created on the left side in this impulse. So we're gonna mark that up. So we have the imbalance, as you can see, from this week all the way up. So the whole imbalance was not covered yet. Okay. Now, where in a sense of targets, what we're gonna target is basically we're gonna target below Asian lows, obviously, and below previous daily low. Okay, now those weeks, so the very week at the bottom, as you can see, so this one, this week is liquidity, right? Sell stops, buy limits, whatever the case may be, below it. So this is liquidity for further movement of the USD CHEF. So I'm gonna mark that up as liquidity. We had several break of structures to the upside. Now, because this is corrective way of price action moving to the upside, it created highs and lows, and it created trendline liquidity, which means that there is a lot of buy stops, sell stops, buy limits, even buy orders, buy now situations. So everything inside of those small lows. Okay, so which means that this is the trend line liquidity, which is also our target. Now, for the last piece of the puzzle, we have 0.9020, which was rejected. Okay, but as we know that this impulse movement that broke the structure originated from the very top, which is quote-unquote supply, which is the order block region, etc. So definitely we're gonna look for entries at the highs and not in the middle of everything, right? And for the last piece of the puzzle, like I said, we have inducement. Okay, we have inducement. Okay, so what is inducement? Basically is a smart money trap, right? Everyone that trades smart money concepts does not what is inducement is basically having stop losses, because what market does is basically it trick you that price is actually going to reject at this certain level number, whatever the case may be, but it doesn't. So it trick you for you to go in and being impatient, and a few minutes later, boom, you're rated, right? So this is the inducement, because we know where our entry is going to be, at the very top or at the very low. Simple as that. Okay, nothing in between. I'm not using breaker blocks. If you're asking this, I'm not using this currently, but yeah, definitely going to add it in the future. Now, so we have this. Now, I'm gonna go on the 5 minutes time frame just to explain to you the let's say cross confluence of time frames, confluences, and as well to have let's say a refined order block and more confirmation. Now, as you can see, this is on the 5 minute time frame. So we have sweep of the order block. So everything on the left side, as you can see there, was swept. So liquidity is now swept, which is, you know, the confluence, because you want to see liquidity being rated on this certain level. Because if this is, you know, if liquidity gets rated on this certain level, then there's no reason for price to go even higher, right? Because everything was taken out. Okay. And the last bullish candle prior to sell-off, obviously, is order block. And in this case, we have on the 50% of the order block. Why? Because it's big ass candle. Okay, so you put it on the 50% and that's about it, which comes to 0.9028 price number. Okay, let's go back to the 15. Okay. So this trade was also called in Signal Group SFX, like always. So members profited from it, and yeah, why not, right? So 10 pip stop loss. Usually I use 10 pip stop loss, 1 to 3. So basically it's going to be 30 pips of TP. Let's see, like that. Oh my god, it takes so long. Okay, 1 to 3 risk reward ratio, easy. Now if I apply the indicator again, you see that we are targeting below the Asian lows, and this is the previous daily low. So I'm gonna mark that up as a target, so you guys are gonna see. Okay, where is it? Like that. Okay, now let's hit the play and you're gonna see the magic. Okay, so this low is target, Asian low, below it, that's about it. And we have a price number which is 0.90 as an extra confluence. Okay, let's hit the play. So we are currently in the London session. So trade was triggered in the London session, which was 10:45 a.m. for me, which is 9:45 in the UK time. As you can see, trade hit to the T with the weak entry. Basically very nice, very good, and straight into the downside. Now this is the time where I put stop loss on break even, because it run more than 1% in the profit. So we want to be risk free, obviously. So we don't have market exposure anymore. Okay, and as you can see, London session ended. Now we entered into so-called pause between London and New York session, and then in the New York session we have escalation to the downside. And before New York even opened, trade hit 1 to 3 risk reward ratio. Call it a day, and that's it. So as you can see, we had news events later in the New York session, so it was beautiful trade before the New York session opened, and obviously before the news events even happened, right? Okay, so that's why, guys, this is another reason why I always use 1 to 3 risk reward ratio, because it's consistent. It's usually going to be hit in the 80% of the time, depends how your, let's say, analysis is, and obviously the trend, and it adds up, right? It adds up. in a longer period of time. It adds up, so it's beautiful, it's simple, and that's about it. So guys, if you like the video, ask questions, feel free to ask questions below. Subscribe, like, share with your friends, whatever you like. Help algorithm grow my account for more content. And yeah, see you in the next video. Thank you. Bye bye.